And Chad is here from D.A. Davidson with this week's stock market news, and boy, oh boy, is there a lot of it. So let's start off with yesterday. It was the worst day since 1987 for the stock market. So can you tell us what happened there?
You know, that's exactly right. It was the Dow Jones closed down 2,352 points to close at 21,200. The S&P and NASDAQ were also down almost 10% yesterday. So yesterday was kind of a historic day in the market from the downside, and obviously everything related to the coronavirus and oil prices, all that kind of combined, but especially the coronavirus is what has driven prices down here lately, with, as we saw, the NBA spending, taking a couple weeks off here, the NCAA tournament being canceled, and just events kind of around the country being canceled has really caused us to be concerned about the economy here in the near term.
Yeah, we watched the board in the newsroom and we saw a lot of red yesterday.
Yeah,
so
that coronavirus kit you gave me last time I was in
didn't quite work.
Didn't quite work for the economy.
So fingers crossed, what can investors expect today?
Well, the good news is this morning the futures are up, and they're actually what's called a limit up. So they're expected to open up 5% this morning, which is a big number. So well over 1,000-point increase on the Dow expected at the open this morning based on the futures. News just came out, as you and I were reading right before we went on air, that Nancy Pelosi and the White House are saying that they're getting close to an agreement potentially on some fiscal stimulus, and so that has helped buoy the market this morning.
And yesterday the director of research for D.A. Davidson came out with his thoughts on some of the questions and concerns that many investors have. Can you share some of those with us and his responses to them?
Yep, that's right. One of the first questions was when's the market bottom, and we're hesitant to try to time that and guess when the bottom is. I would say that traders are watching the December 24th 2018 amount. At that point, when the S&P hit its bottom, then that's about 5% below where we closed yesterday, so that could be a potential bottom if the market continued moving down that traders are watching. But from there, we're just going to continue to watch it. We don't really know what that bottom's going to be, or maybe we've already hit it. Next question is about the recession. Will there be a recession? A recession is defined by 2 consecutive quarters of negative GDP growth. And although we don't know whether or not we're going to be in a recession or not, we do expect that the first and third quarters will probably be below expectations, and second quarter will probably be negative. So certainly the odds of that have gone up. All that being said, we do expect earnings to be a lot stronger in 2021 than 2020, and so we will come out of this as we always have in the past, and just continue to not panic and just stay the course and saving regularly. And I'm confident that 3 to 5 years from now we'll look back and say what a great buying opportunity we had, just like we did in 2008, 2009, and 2000 and 2001 and 2.
All right. Well, Chad, thank you for giving us a little shimmer of hope. We appreciate that.
Always my pleasure.
We'll be right back after the break.